Hello, everybody. Welcome to today's Bitcoin update. And yeah, Bitcoin is not looking too good right now. It has been just one of those situations over the past week. I mean, throughout most of June, we had a decent move up, almost came out to take out these highs. We did do it on purpose. We didn't do it on spot, which has generated a lot of liquidity up here. But we have then subsequently seen a rotation all the way back down to what I would consider the low of this local range, but also just right in the middle of the larger range that we have right now. So if we do just take a look at the overall range that we're trading in, which is very, very simple. You just take it from that first low that we put in all the way back. My God, we've wasted like how long in this range? We've not wasted it, but just insane that we've just been in this range since March. And we're right there in the middle, slap bang in the middle of this range from that first low we put into that first high we put in. We haven't yet made another higher high. We have made a lower low on this. So within this range, you've had a deviation down here. We had that deviation. We had a rotation that came all the way back up to the high, but it did just reject at that monthly level that we have from back in April and the value area high of this range. And we are now just consolidating right in the middle. So, of course, for the last few days, we have been there at the POC. We've just been shopping around that POC, little moves up into high time frame levels, take a little liquidity here and there, news-based events, and then immediately retracing that on every single occasion, including yesterday, where we did have more bullish news that would say risk on for markets. We had the Nasdaq making new highs, we had the S&P 500 making new highs, but Bitcoin unable to do so. And because we're seeing that weakness within Bitcoin, we have also seen that weakness just roll over into the altcoins, which are just bleeding lower and lower and lower. So we have right now, we have a situation where we have legacy markets doing this, they'll range and then they'll go up, and then I'll pull back and then they'll go up, and I'll pull back and then we'll go up. We have Bitcoin that's just doing this, just sideways, 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 sideways. And then we have altcoins that are just doing this, doing this, doing this. And it's causing some very, very, very bad sentiment. This being probably the worst I've seen the market in a long time. The hardest I've seen the market in a long time, because every time we get a move up, it just isn't sustained, and you're getting like one opportunity, and it maybe lasts seconds, minutes, in order to go short again. And then we're spending so much time down at these lows that people are then like, well, the only trade you can get into, if you're waiting for, like, if you're not just on it and executing in that very moment, the only kind of trades you can get into are longs, right? Because we just settle on the lows and then we go pop, pop, and it's like up and then straight back down again. And it's just creating this cycle of long positions entering. There's a move up that takes out any shorts that are within that, and then they get stopped, and then they get stopped, and then they get stopped. So we're not really seeing that sustained price action or a sustained move for any longs. And I think that's quite evident with what we see in the CVD and what we're seeing right now. And we'll go on to that in just a minute. But from a technical perspective, yes, we are still in the middle of the range. It is still support. And we've seen before, right? The market just loves to keep people second guessing, to create that panic, to create those, just that bearish sentiment that, oh my God, we're really going to drop here. It's really not looking good. And then seemingly out of nowhere, but there is technical reasons for it, we just get those moves. And this is similar to what we saw back at the beginning of May, where we had that bounce and then we just kept chopping, 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 and then we pop. It was a lot easier back then because we'd had a deviation here. The problem with where we are right now is because we're in the middle of the range, a very, very risky place in which to start opening positions. And you'd have to say The better value for any long positions would be if we do see further downside, because then you're extending away from where there is just a lot of balance. It's a very crowded trade, and that extension down a little bit back down towards these lows would at this stage make a bit more sense if you are looking for longs. So it is a situation now where I have been compounding onto my long positions within the low of this range, but I am very much open, and I have been for a long time, that we rejected the value area high. Of course, this value area has been moving up, so overall it's okay. We had a value area that was all the way down here, and we can show this from the range itself. If I show the developing point of control, it had that move down. We didn't get the extension below, and then we've just been, okay, we've moved up, but we haven't been able to see extension above there, and now we're just consolidating around that POC once again. We may get a situation today where this POC shifts back down towards this like 66, 67, 66, 800, 67K area. So if that happens today, that will be something to pay attention to. This is on spot. Of course, within perpetuals, our point of control is still lower. So we haven't really filled that balance up here, and we haven't really got that acceptance of price within a lot of the perps markets of these higher prices. What we also see with our developing value area is we had initially price just rotating between value area, high, value area, low. Okay, and then was moving down as the value area is moving down, and now we're seeing that value area start to creep back up again. So we are getting rejections from there, but we are seeing this creep back up. That does mean that if there is a rotation back down to value area low, that would be a good opportunity in which to look for those long positions, and there is confluence down there, with it being, of course, a one-day gap on the chart. I'm going to move off this. You have this confluence again, a gap on the daily time frame. All right, this being the only real imbalance that there is left within this entire range now. And if we're looking internally, and if we're not looking at taking out these highs or these lows, okay, this being the one remaining imbalance, then if you go down onto the 4 hour, it is also there. Okay, so the daily gap, the 4 hour gap, essentially exactly the same levels that we're looking at. It is between these lows that we put in on the 16th of May, which are there at 64,500. Okay, and the support that we had, which was previous resistance, okay, it hasn't yet flipped into support. We haven't tested into that at this stage, but that support that is there at 63K. Now, from a 4 hour perspective, okay, we did have this wickless 4 hour candle that did get tested back into before we saw that continuation back above, but there is still imbalance down there. There is still an area on the chart that the market could seek to clean up. If this was really, 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 really bullish, we wouldn't have headed down there. We would have probably just held this POC, got that continuation to new all-time highs. And the plan for myself realistically was, I thought, and the plan I had was that we would see a move up and then probably come back down for these, because we'd seen deviation below the range. I would have liked to have seen a deviation at the highs, and then I do still remain with that bias that we probably see a fairly sideways summer. I'm not expecting this to go crazy to like 80K, 100K during the summer. I think it's more likely we see that in Q3, Q4 of this year. So the main plan was for deviation up here and then to come back into the range, but we haven't seen that yet. So if we're holding here, that idea could still happen. We could still get the move up. We could still get the move down. It's just extending and extending and extending. Now, if we do get a drop down into here, in a way, it's even more bullish. Because if we do drop down, if we do clear up all of this stuff that's below within this range, then there's no reason why we need to then really remain in the range. So if we do drop down, this could go to new all-time highs and get a cleaner break. And then we've got to be mindful of that. So although we've got this short-term pain, and that's not going to be nice to trade for a lot of everybody right now. And if we do drop down here, the carnage that's going to create within altcoins is going to be pretty crazy. But right, we yeah, this that in a way would be a little bit more bullish. We've cleaned up the range a little bit more. We've spent more time within this range, and then we can be looking at a cleaner break afterwards. So that's kind of where we are within this whole range. Okay, we've just been at the same point for quite some time now. Now, locally, if we have a look at here, daily open, what we've seen so far today is very simply, okay, we had that move back down, which took out some local lows, testing in towards this anchored VWAP, which is from this 57, 58K low that was put in back at the beginning of May. So 6 weeks ago at this stage, holding this anchored VWAP for now, and has had a little bit of a bounce, but it's not looking great. We've seen this move back up into the single prints here. We haven't seen any kind of strength from the market. We are seeing that within legacy markets, they're continuing today so far. Today, they are pulling back, and Bitcoin is pulling back with it. Not as much. All right, so it is holding here, but it's just very sideways. There's not a whole lot to be really looking at. So if we are looking at where price can go from here, the probability at this stage, because we have just been in this downtrend for the majority of the week, here we put in this high back on Friday of last week. We make a low, we put in a lower high, a lower low, a lower high, although it came very close to it. We've not yet made that lower low, so we can see that continuation today to take us down into that 64K zone. So be prepared for that situation. If we do see strength, and I think strength will be slightly difficult to catch, because each time we've seen this move, okay, we had a very, very bullish CPI read that gave us that big move up. Okay, that immediately got retraced. We had the news candle that was down here that got immediately retraced. We then yesterday had our daily open. We had that move down during Asia session, back down towards these lows, and then on 2 occasions yesterday, testing into that daily open, rejecting, and now we find ourselves going lower again. So bears are in control, short positions are in control. However, as we've seen with Bitcoin, the reversal can come from more or less anywhere, and it can happen quite quickly. And when we do start to see that shift in market structure, it could lead to a rather rapid reversal. We've seen how quickly sentiment can change just over the course of these last 2 weeks. All right, everyone being uber bullish when we're up at these highs, but it gave an opportunity for a short position, immediately rewarded those shorts. Once again here, another opportunity for a short position, immediately rewarded those. And then on each occasion where we've had even some slight bull case where everyone maybe FOMOing in at the highs, immediately reject. Yesterday, you got that bounce during the PPI, a really positive read, really dovish within the PPI, and the legacy markets responded accordingly with that. But then once again, we continue to go lower. So it's just significant weakness that we're seeing across the market. Now, if we have a look at where we have basically, we'll look at the liquidation levels, and it is there is a lot of liquidity above. All right, but we can't be expecting that to be taken until we see some strength from the market itself, and until we do start to see that reversal. We do have CVD that, especially from perps, all right, when you compare it to the lows that we put in back at the 1st of May, that is continuing to just bleed. And spot isn't as bearish, okay? Spot markets, okay, you put in a low back in May, you come down, you've made a higher low on the CVD, you're making another higher low of the CVD here, but perpetual is just continuing to bleed, and just shaking out a lot of participants from the market. Even locally today, we have this scenario where, right, we have seen, I mean, actually today so far, more so like spot selling, but, at least locally within this last move, okay, we can see that there was a bit of a move up that happened this morning, early on this morning, that was mainly perps driven. We've then seen that continuation from spot, and at least here within the last few hours or so, it is looking like we're seeing some more absorption here, and then that could be giving us a bounce that at this stage you'd just be looking to take out some highs, see how that gets on, see if we can start to fill those single prints or even close above that, and to get that maybe get a little bit of a bounce going on. Now, if we look at the ETF, again, it's not all doom and gloom. I think long term we're looking okay here, and we've seen these days previously where we just consolidate, make everyone super bearish, and then it just pops. Yesterday there were quite large, not huge, but there were outflows from the ETFs, and it did create this discount within the ETFs, which means that you would expect there to be more demand today when the market opens, because that is running at a discount. And what we also have is the spot premium right now, which is suggesting that the price of perps, people trading on futures, people trading on the perps market, are feeling the pain a lot more than what the spot market is. The bid is still holding there for now. However, we do need to be aware for sure that there is significant levels below that the market can trade into. Open interest has been relatively flat through the last few days, but when we've been getting these drops, it has been shaking out a lot of the OI. And so far, we are seeing that relatively flat here. So we're looking for a bit of volatility. We're looking for that move to give us some more confirmation of where this may be going next. And we are seeing, I think, what this choppiness has done really is to just drop that OI from what was very high levels to just like slightly high levels. So it's a mixed bag again, similar to how it was yesterday. We have a bit of a mixed bag. We're looking at an environment where we're going to be seeing negative funding in the market, where the spot bid is holding up relatively well, but we're in a downtrend and we have to trade according to that. So we're holding daily open here. What would make me a little bit more bullish, I think, is if we can see a move up towards, like, reclaim that 67,300 area that clears back through the single prints holding there. But then there is still a lot of stuff that we can work on above. There is the FOMC highs. If this can reverse and we can start to hold some support above this range, just the pull out of this, the like extreme low of this current range that we're at, then we could see that move higher. But bias for today remains, depending on what we see from the legacy markets, I'm thinking it is increasing the probability at this stage that we do see that move down before taking the highs to that 64K level, and then we consolidate there and see how things are looking after that. So obviously, things can change very quickly, could go up, could go down, could go sideways. It's one of those markets that's very difficult to call right now, and we just need to be able to react to the price action when it arrives. We need to be aware of the levels that are there. Where we are right now, there's not really a trade on. If it drops, that does give an opportunity for a trade. If it gets a bit of a bounce, once again, that does give an opportunity for a trade. So whilst we're just in the middle of the range, at the point of control, a bit of a no trade zone, we just have to wait and see what's going on. So yeah, I think that's probably everything I have to say with this update on Bitcoin. With the TPO, previous day point of controls and all of that, there is, if we just draw on our session volume profile, we can have a quick look on there, because I would imagine what we may see is we've got an MPOC up here. No. So I was thinking we may have seen some more volume, but even the MPOCs, of course, the one outlier of this is the big FOMC, the PPI CPI day, where we do have that 69 area that would be a target for this. So if we are to move we're looking at quite a big move higher. But we've got to wait to see some strength for the market before we can even anticipate that. And yeah, we are just left with okay, there's balance here, there's balance here, there's a bit of a void in between that. And then if we're looking down, all right, from this point onwards, it is a move of, let's clean this chart up. We are looking at the clearer trade opportunities essentially being from this very point, 4% move up or a 4% move down. Which direction that's going to be, we will just have to wait and see. So on that note, thank you very much for watching this video. I'm going to continue on with the stream right now and see what you guys have to say. But have a great weekend, and I will see you next week. Cheers. Bye-bye.